It was a good year if you were a driver in 2013. The price of gasoline fell for most of the past year, ending 2013 near its lows. That helped out the wallet a bit. As for oil, it's traded between $90 and $100 a barrel for the better part of the past 12 months. And as Sharon Epperson and Jackie DeAngelis predict, prices will once again be the focus in 2014.
Get ready to fill up for less in 2014 as gas prices fall to a 4-year low. Refineries are increasing production, causing supplies to swell, and demand remains rather muted. We usually have a seasonal price surge in the spring. That's when the East and West Coast could see pump prices near the $4 a gallon mark. But prices should be below $3 a gallon in the middle of the country for much of the year. Prices at the pump depend in part on the price of oil futures traded here at the NYMEX. And even if U.S. oil prices reach the triple-digit mark, they probably won't stay there for long. The ongoing boom in domestic oil production will continue. And as we have more output, we'll likely hear more calls for exporting more crude oil. Right now, you can only export it to Canada. But while that debate continues, supplies will likely outstrip demand, dampening oil prices. But truckers, beware. Even if oil price gains are muted, we could see higher diesel fuel prices. The sharp demand for distillate supplies globally may take diesel prices significantly higher in the early part of the year, offsetting the declines in gasoline. But then prices should fall, or at least steady a bit. For Nightly Business Report, I'm Sharon Epperson.
When it comes to transportation of domestic crude supplies in 2014, all eyes will be on the rails. IHS estimating that by the end of next year, rail capacity could grow enough to handle 700,000 barrels of crude a day, compared to 150,000 barrels today, and the Keystone Pipeline would move about 830,000 barrels. Looking at it that way, rail transportation makes a decision on the Keystone Pipeline irrelevant. The recent deal struck between Iran and the international community will ease sanctions on the country and bring some of its oil back onto the market. This is only the first step in a lengthier process that will include more negotiations and overcoming technical challenges to restarting production. Bottom line, Iranian oil will not have an impact on oil production and prices. And keep an eye on Dow component ExxonMobil. The company continues to buy back stock to the tune of $3 billion a quarter, but hints from management about a peak in capital expenditures are a bit of a red flag. Look for Exxon stock to continue its rise, but not necessarily outperform the competition. For Nightly Business Report, I'm Jackie DeAngelis.